Hi, and welcome to the Stockscores Market Minutes for May 4th, 2015. This week we're going to talk about when bad things happen to good stocks. It's not impossible for a really good-looking stock to suddenly make a large gap to the downside because of major fundamental change at the business. Now, these big gaps typically relate to binary events. A binary event is where either something really good can happen or something really bad can happen. A mining company that is exploring for gold could either find gold or not find gold. A biotech company that is developing a new drug could either have that drug be successful or have that drug fail in trials. And the effect on the fundamental value of the firm can be immense. And as a result, those news releases that come out related to these binary events can cause the stock to either gap up or gap down a lot in price. Stocks with the potential for binary events are riskier. A stock like Microsoft doesn't have binary events that can have a huge effect on their business. It's more the smaller cap companies with single business aims that have this potential for these large moves in one way or the other. Now, when this happens, let's say a company does announce some bad news on a binary event, then it's important that you just take the large loss and move on. However, realize that these events do not happen very often and they don't happen with every stock. If you are not comfortable with the risk of stocks that have the potential for binary events, then simply don't trade them. That should be one of your criteria when evaluating stocks. So biotech stocks, mining stocks, junior oil and gas exploration companies, these are the companies that have that potential for these big moves as the result of binary events. And we realize also that the big move can happen to the upside. So there is a potential reward in these trades as well. But typically, if I know a binary event is coming, let's say I know a biotech stock is going to be announcing the results of a trial, I will sell before that happens because usually the stock moves up in anticipation of the event, and sticking around for the answer often just isn't worth the risk. All right, let's take a look at an example of one of these. Here is a stock that made a pretty decent breakout. There's the moving up in anticipation of the news, and the news was bad. Huge gap to the downside. How do you protect yourself from that? Well, you have to exit before the news comes out. Now, with biotech stocks, there's something called a PDUFA date, PDUFA, where you can find out when their announcement from the Fed, the Drug Enforcement Agency, not the Drug Enforcement, the FDA is what I'm trying to say. When the FDA has an announcement on a trial and whether it's been approved or not, those announcements are called PDUFA dates, and you can find those out on the web. Just Google PDUFA dates, and there's websites that will tell you them. With an energy company or a junior mining company, you can kind of figure out when the news is going to come out, and maybe don't stick around for the news, but certainly enjoy the run-up in anticipation of the news. All right, let's get into this week's analysis. Pretty frothy week. We started the week moving down. We actually had some pretty good selling pressure through the week. But on Friday, the market rallied back after some breakdown on Thursday. You can see there that technical breakdown on Thursday. There was a bit of panic selling, everybody dumping stocks, but we came right back with a gap up on Friday. And so we're really back into that short-term ascending triangle pattern that is threatening a breakthrough resistance. We had a little breakthrough resistance there that failed. We had a little breakthrough support there that failed. So we're still in that optimistic pattern. Now, looking at the daily chart, normally I look at a weekly chart, but I wanted to show the daily this week. And there you see we've been in this sideways trading pattern for 1, 2, 3, 4, 5, 6 months. That's a long time to be in a consolidation phase. But it's also a good thing because when you break out of these, you typically get a move into the to the upside that is equal in length to the length of this sideways consolidation. So we're really setting up for a good rally to the upside. We just need the breakout, and it hasn't happened yet. So I'm optimistic, but still the market is neutral right now. Moving along, here is the chart of the Russell 2000, and you can see a pretty healthy breakdown this week on the Russell 2000. I think the reason is because the expectation by the market is that interest rates are not going to be going up anytime soon. And a lot of the money was moving out of large cap into small cap with the expectation that interest rates were going to rise. Well, given that that's not happening, at least not in June like a lot of people were expecting, you're seeing some profit taking in the Russell 2000 small cap stocks. All right, next chart is the intraday 60-minute chart going back a month for the TSX 60, and we've been kind of doing what's called a flag pattern, where we're just kind of drifting lower, not really selling off, but the buyers just don't seem to have a lot of motivation right now. And looking at the longer term chart, you sort of see why the market rallied up to that long-term high from last summer, and it's stuck there. And this is why the market has been a bit of a bear to trade. Not that it's a bearish market, but it's been a grind, not a lot of excitement, simply because the market is consolidating sideways with optimism underneath resistance. We need that breakout to recharge the buyer interest, to get the speculators coming back to the market. That could happen next week. It could happen in 3 months. It could never happen. We don't know. But certainly the pattern tells us that it should happen soon. It's more likely to happen within the next month. The junior market in Canada is really stuck in that sideways trading range. Commodity prices are relatively weak. Given that there's been some weakness in the US dollar lately, and I'll show you that chart in a moment, we could start to see this sector pick up a little bit, but I need to see a breakout through that red line of resistance. Treasuries really dropped this week, and I was a bit surprised because the US Federal Reserve said that they weren't going to be raising interest rates anytime soon, but it does seem like money is just coming out of that bond trade, which was a pretty crowded trade. A lot of people buying bonds, which had taken interest rates to dramatic lows. Well, this week we saw a pretty sharp sell-off. When you see a sell-off in this ETF, which is the 20-year bond ETF, that means interest rates are rising. Now we're still in that upward trend. I've drawn the green upward trend there for you. And what's important to note is that we have a falling top that's built. And that's a sign that really the low interest rate environment is at least done for a little while. Not that we're going to go dramatically higher in rates, but certainly you're seeing the market starting to price in a future Fed rate hike. There's the US dollar, which kind of went parabolic. You can see this trend line here went parabolic to the upside, and we've now corrected back to the trend line. We actually broke down below that trend line. I like to give it another week just to see if that truly is what's happening, but money is definitely shying away from the US dollar over the last few weeks, and a very crowded trade, a lot of people bullish on the US dollar, and that can mean a pretty sharp sell-off when everybody runs for the exit door at the same time. Here's the chart of gold, and despite the weakness in the US dollar, gold could not get any traction. I continue to be bearish of gold. It's in this slow drift sideways. There's really no interest in it. And until we can see some excitement breaking through that red downward trend line, I would avoid gold and gold stocks. Oil is actually showing a little bit of strength, breaking through that red line of resistance, and again benefiting from the weakness in the US dollar. The big picture, if you look at this chart on a weekly time frame, it's still a very ugly chart. So I think short term you can trade it. You can maybe take advantage of a little pop here if we get a breakout through that red line of resistance. I mean, we did break last week, but it was on very light volume and not with a lot of excitement. I'd like to see a little bit more authority, a little bit more enthusiasm breaking through that, and it could be that oil will surprise everyone and actually make a little bit of a comeback. Not there yet, but it's close, so keep an eye on that. Finally, there's the chart of the VIX, which is the fear index, and fear really at lows. I mean, it picked up a little bit this week, and then it fell back again on Friday, and essentially you're just seeing that people are more or less complacent about the market. They're not really eager to buy, they're not really eager to sell, and they're not buying insurance against a market correction. So that could end badly, but for now, there is no fear in the market. So my ratings then: US stocks, bullish long-term, neutral short-term. We need to break out through that resistance level. Canadian stocks, neutral on both time frames. Gold stocks, bearish on both time frames. And oil, bearish in the long term, but bullish in the short term. We could see a little bit of a tradable rally if we get that breakout. US stocks are building optimism and appear likely to break out soon. Canadian stocks are also testing resistance, but there is greater uncertainty, more volatility in the Canadian market. Weakness in the US dollar is helping the short-term outlook for oil, but gold is not reacting with strength despite the fact that we would expect it would. Watch for a break to new highs in stocks. They're very close to doing that. We could soon see an end to this boring sideways trading action that we've been in. Well, that has been the Stockscores Market Minutes for, May 4th, 2015. Have a great week in the market and trade well.